Hi everyone, hope you guys are all having a great day today, and in today's video I'm going to cover the whole entire market in terms of Dow Jones, Nasdaq, and S&P 500, including the economic calendar. Now I do post these videos up daily, so I highly encourage you to double check the latest video on my channel so that way you get the most up-to-date information. And if you want to be notified when I do upload the next video, consider following, subscribing so you'll be notified when I do. Now before I get to the analysis portion, I'm going to go over the economic calendar, and for Thursday, September 12th, 2024, at 8:30 a.m. we have initial jobless claims as well as producer price index, Core PPI, so inflation number in terms of as well as PPI year over year, Core PPI year over year, and then monthly U.S. federal budget at 2 p.m. Now, given that we had the inflation numbers for consumer price index, and the market did drop earlier in the day, but then bounced back up, as you could see, for example, in one trading day, inflation numbers came out during 8:30 a.m., dropped down all the way down to $539 and some change. This is SPY ETF for S&P 500, and then bounced all the way up to pretty much $554 and some change. Now, one thing to note is not only we have PPI inflation numbers coming out for Thursday, September 12th, but next week, all these data points do help out in terms of what the market could expect for the rate cuts to come and happen, either 25 or 50 basis points. And that is because on Wednesday, September 18th, 2024, FOMC interest rate decision will be coming out at 2 p.m. And at 2:30 p.m., we have Fed Chair Jerome Powell press conference. Now, given the inflation numbers that came out, the market is pretty much baking in about somewhere between 80 to 85% that the rate cuts will be 25 basis points versus the 50 basis points. I would say, in my opinion, the market was kind of optimistic that potentially the Fed could cut interest rates by 50 basis points, even though that Jerome Powell in the last speech he gave was more towards the 25 basis points as opposed to the 50 basis points. But the market is somewhat taking it in as, again, 25 basis points. And then the tech sector we saw pretty much bounce up a decent amount, I would say, in my opinion. For example, Nvidia, which is a mega cap stock, in the trillions of dollars, and went up 8.15% today. So that is quite huge for a tech sector stock that is a mega cap stock to go up that much significantly, obviously pulling the market up as well with it. And so overall, be mindful of the Fed rate decision making coming up next week. Again, that's in September 18th of 2024. And in essence, first of all, I'm going to go over the MACD lines. So in terms of the MACD lines, right here you can see, in case you're new to the channel, this indicates if we're in a bearish or bullish movement. And this is for ETF SPY, which is the ETF for the S&P 500. Same thing, just different ratio. And for the 1 year chart, it is still in the bearish movement, but there is a chance to cross over to bullish movement. If we look at the 5 year chart, before it used to be solid red, now it's becoming a lighter shade of red, potentially all kind of going towards of maybe we'll start going up and test the all-time highs. So if I go to the 3-month chart, you can see back here in July of 2024, let me go to the all chart actually for a sec so you can see we are in the all-time high territory. And in case you're new to the channel too, there's an upward trend resistance line dating back since 2010. Every time we went up to it, pretty much got knocked down. It doesn't mean the market was not going higher. It was going higher. It's just every time it went up to it, it got knocked down. We have an upward trend support level, so on and so forth as well. And right now we're in the mid-range. Now we've seen a couple times in the mid-range where we would get knocked down when we're in the mid-range to the upward trend support level. And like you've seen right about here, mid-range, get knocked down, a little bit less than mid. But we do have more room to the upside for the S&P. For the Nasdaq, it's a little bit different. And then for Dow Jones, it doesn't necessarily have a channel, but I'll go over that as well. But this is for the S&P, and we do have room to the upside. But if we zoom in, like I stated, we're in the all-time high territory. July of 2024, all-time high. August and September, tested it again, could not necessarily pass it. And then these spike ups were during pre-market and after hours. And then these ones were within play, I believe. Pretty much after hours and pre-market as well. But the question is, are we going to go to this all-time highs again and retest it, and are we going to pass it? Potentially, in my opinion, because the MACD lines are potentially curving up to the upside. Not a guarantee, we could get pulled down. I'd say we need to see a couple more up days, obviously. But in terms of if we get to this zone right about here with all-time highs before the Wednesday meeting, and then I would not necessarily say the decision that is 25 basis points. I don't think that means anything because the market's already baking that in. I'm expecting that if Jerome Powell's speech gives optimism that a lot more rate cuts are coming, then that could be enough catalyst to break through this all-time high restriction in terms of resistance level, right? Because if it's just 25 basis points and Jerome Powell's speech is just nothing extra, then it would be almost like sell on the news kind of event day where potentially these bearish and bullish movements in terms of MAC lines could reverse back down to the downside and not necessarily be that strong. For example, like the 5-year chart, it doesn't necessarily have to cross over to bullish territory. It could stay in the bearish territory and then just come back down. Like for example, we've seen before in the past, it's red, solid red, then becomes a light shade of red, and then becomes a solid red again, once again, going down a little bit further. Mind you, this is a 5-year chart, so it might not look like a big drop, but it's still a decent drop if you zoom in further. Again, this is a 5-year chart, right? So there's that. So be mindful of that. But yeah, are we going to go to all-time highs again? To be honest, potentially, yeah, because if we see the tech sector go up higher, and if inflation number, for example, for the producer price index is favorable, which I don't personally think it will be, because the inflation numbers that came out today, nothing crazy. It was just mediocre for the most part. So it, in essence, if anything is a catalyst, it would be more for the tech sector going up, potentially pulling us up to the all-time highs again. And then by the time Jerome Powell speaks, if he provides us enough optimism moving forward, then we could break through the all-time highs restriction, which is beneficial for the Dow Jones as well. So for the Dow Jones, you can see we're in the all-time high territory as well. And then if you look at the 1-year chart, before I go and zoom in further for the 3 months and so on and so forth, 1-year chart showing a potential crossover, well, not potential crossover, sorry, but what I mean is it's kind of slowing down in terms of the downside. This one's more prevalent to be pulled to the downside, but it is more 30 stocks versus the S&P, which is 500 stock companies, right? So 30 companies versus 500 companies. And then for the 5-year chart, you could argue it's going to cross down, but it's been in this phase for quite some time and has not crossed down to the bearish movement. That's for the 5-year chart. And for the all chart, they're all pretty much looking like the same. The S&P, Dow Jones, Nasdaq, for the all chart, it has room to pretty much continue to the upside versus coming to the downside. Mind you, they're all in the light shade of green. I believe even the Nasdaq, I'll double check soon, but the S&P is a light shade of green. You could argue they're going to get pulled down, but again, if the catalyst is for the upside versus, but if the tech sector continues to go to the upside, because in a way they've been kind of somewhat in the sub-low levels, where now they're kind of potentially could be due for the upside, potentially. Because again, in my opinion, Tesla, they're going to be reporting shipment numbers soon. And if those numbers are high, then we could see somewhat of a rally up for Tesla shares too, potentially. Again, this is just my opinion, so please do own due diligence and research before buying and selling. But Tesla is a mega cap stock as well. So if Tesla rallies up, and then if we see NVIDIA rally up again, and again, with Fed Jerome Powell potentially adding positive light moving forward, then we could be going up again. And can we get pulled down? Of course we can, because like I stated, we're approaching all-time highs, and if Jerome Powell's outlook is nothing favorable, then it could just be a selling news event heading down, and then all these tech sectors that went up could get pulled down, except for Tesla potentially, because I think those shipment numbers could be a good catalyst to pull it up. But Tesla is way less versus market cap. For example, if we look at the market cap for a sec before I come back to the Dow Jones, market cap is $728 billion versus NVIDIA, which is, I think, close to $3 trillion, so $2.87 trillion. So Tesla doesn't have that much of a pull versus NVIDIA, but still a pull nonetheless, right? Now, by the way, mind you, volatility index was spiking up back and forth nonstop today, but it was at 17.7%. All right, 17.7 points, and it was at this negative 7.18 percentage points. But either way, for Dow Jones now, to go back to it, if we go to a 3-month chart, again, like I stated, we're in the all-time high zone. And back in July, just like the S&P, tested the all-time highs, or created the all-time highs, actually, mind you. And then back in August, September, tested a couple times, but we did break through for the Dow Jones. The only problem is not strong enough. The whole markets were coming down within the same time. And then indications based off MACD lines was more of a pull. But are we going to head back up there to test it again? Potentially, it looks like. Where it, again, the markets, it tends to seem, or seems to be moving up and wanting to test that zone again, potentially. Now for Nasdaq, I'm going to be looking at ETF QQQ, which is, again, the ETF for Nasdaq, but it's the same thing, just different ratio, but it's a little bit different. We have the all-time highs back here in July, and we did not test it back in August and September. What we ended up testing was the upward trend resistance line dating back since 2010. So I'm going to zoom out just for a sec. Upward trend resistance line dating back since 2010, just like the S&P 500. Market was still going up, mind you, but every time it went up, it got knocked down. And then 2020 to 2022, It broke through, but then came back underneath, and we had issues passing it once again as of recent. And we did break through in July. So let me just zoom in for a sec. And then, by the way, there is an upward trend support level, but we got quite a ways to go down. And in my opinion, I don't expect to come down to this level because it is election year. In my opinion, I don't expect that much of a drop personally. But either way, so this was the July when we broke through again as of 2020, July 2024. Came back underneath and had issues breaking through it, and then got pulled down just like the Dow Jones, so on and so forth, and the S&P. But except the difference is, instead of the all-time highs going up to and getting pulled down, we got issues passing the 2010 level, upward trend resistance level. So if we were to go up for the Dow Jones, and S&P, they would be testing the all-time highs, but for the Nasdaq, they'd be testing this upward trend resistance level. And because this one's a little bit different, and you might not be able to tell it by yourself in terms of all-time highs, because Dow Jones and S&P, you could pull it yourselves. But I'll tell you right now anyway in this video in a couple of seconds. But for the S&P, or for the Nasdaq ETF QQQ, it closed at $468.62, and to test that all-time 2010 level, you're looking at resistance roughly around the ballpark of $487 and some change. Mind you, the longer we take to hit this upward trend resistance level, the higher the high will be. So for the if what you could expect is, I'm not expecting one day jump to go to 488 or for $487. You could expect it to probably be about $488, probably $489 by the time we get to it, so on and so forth. But mind you, there's going to be, in my opinion, guaranteed resistance, because we've seen it resistance multiple times since 2010. I shouldn't say guaranteed, because there's been breakouts, so who knows, this time could be a breakout as well, but I'm expecting some kind of resistance within that level, within that time frame. Now for the S&P, by the way, for the all-time high ETF SPY, you're looking pretty much around $564 and some change. And if you count the pre-market after hours, you're looking at about $565 and some change. Now, mind you, the price that SPY closed at is $554 and some change. And for the Dow Jones, closed at 40,861 points and some change. And the all-time high zone pretty much would be about 41,423 points, give or take. And then the previous all-time highs that were actually breakthroughs and twice bounced off this level, looks like, but it was about 41,573 points, give or take. But yeah, that's basically it. Hopefully you guys liked the video. Hopefully you enjoyed it and found it beneficial. If you did, consider dropping a like. It does help with the channel, so thank you so much for that. I do appreciate it. And if you want to be notified when I do upload my next video, consider following and subscribing so you'll be notified when I do upload them. And that's basically it. Thanks again for watching. Appreciate it. Take care. God bless and peace.